Good afternoon. My name is Carol Harmer, and as most of you know, I trade and analyze financial markets, futures, indices, and precious metals. I also am very interested in the bond markets, and this is a monthly chart of the 10-year note futures. Now, if you look at where we peaked in 2020, and I've traded these for many, many decades, at much lower levels, let me tell you. However, when we peaked in 2020, we saw a steady decline, which would mean bond yields to rise. Now, obviously, the last 2 years, what we've been doing is creating a sideways trading pattern within the downtrend. And what is interesting to me is the scope of where the bond markets can actually go on the downside. There are two ways of measuring where a market is going to be projected to. You can either measure what we call this bit here, and you deduct how many points this area consists of, and then you minus those points that give you a downside objective. The more logical one I think that I'm going to go for at the moment is you'd be measuring this area here. And you can see where this continuation triangle is forming. The base of this triangle for this month is 108.17. At the moment, we're trading 2 points higher. But if you just look at where the pattern started to make at 117 down to 106, you can basically say it's 10 big figures. So if we're trading at 110 now and we break that 107 area, the first target you would be looking at would be in the 97 to 96 area. So that would be the big figure, 97.00 or 96.00. So this is the scope of where this market could go. I'm not going to give you any more longer term projections because they're really quite horrible. But what I would say is that this market, all bond markets, at the moment, you need to be aware of where they are, where the primary trend is, and what you would see if the market broke to the downside. Now, as we are in a downtrend and have been for quite some time, I am seeing that people could be calling this a head and shoulder base pattern. This is why I think that is not the correct scenario. The reason being that the primary trend is down and these patterns are like a pause for breath. So you go down from 2020 to 2024 and then the market doesn't really run out of steam, but what it does, it's like running up a mountain. You run up that mountain, but you don't do it in one go. You take little breaks. And this is what creates continuation patterns. All this is a little break in the market before the next move. As we're in a downtrend, as this is a continuation pattern, we are projecting that the market's next big move is going to be to the downside. Okay, that's all from me today. I hope that you just keep this in the back of your mind. Of course, for day traders, these monthly charts are too long term. However, if you are aware that this is going on in the background, it will help you in your day-to-day trading of the bond markets. Many thanks.